Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about Palantir Technologies and their PLTR stock price, which just got upgraded up to $25 by an extremely prestigious analyst that I personally like, who is none other than Dan Ives, also known as Daniel Ives. And with this new price increase and price prediction for Palantir's PLTR stock, this has sent the stock surging over 10% as of right now, which is phenomenal. So without further ado, go ahead and remember to annihilate that like button for more Palantir Technologies stock videos. Don't forget to go and comment your personal price targets for Palantir Technologies down below on what Palantir could achieve in the next 12 months. Don't forget to subscribe if you are new, and if you want to support me personally, don't forget to become a member of this channel for as little as 99 cents because that's what keeps me here on YouTube. But with that being said, I say let's jump right into today's stories. The first article we're going to be analyzing is titled, Why Palantir Technologies Stock Soared. So right now they're trading for around $17.81. However, I think they're easily going to be able to break $18 by the end of the day. While more bearish negative analysts believe the company is going to fall back to around $5, while the more bullish analysts believe this company is worth around $25. And to put this into perspective, the previous high-end price target for Palantir was $18 per share, but now we have a $25 price target, alluding to huge potential upside still left in this company. We also have their upcoming earnings report to look forward to because that is going to be released on August 7th. Also, if you don't know, Palantir Technologies is a big data and analytics company which serves both commercial enterprises as well as government clients, and they specialize in artificial intelligence. As you see from their stock chart here, they have surged in price, and I actually think the company is still going to pull back in their overall share price, but given this new price prediction from Daniel Ives from Wedbush, this is going to push the company's share price even higher before their earnings report. And if you've watched my earnings report videos on Palantir Technologies, I do think that their earnings report is going to be very positive. However, I think after the stock price surges, investors are going to use this as an opportunity to take profits. So let's get into exactly why Wedbush, and particularly Dan Ives, actually initiated coverage on Palantir and why his share price target is so high for this company. As of right now, according to Daniel Ives, he has an outperform rating, also known as a buy rating, on Palantir Technologies, as well as a $25 price target over the next 12 months. This would mean investors could potentially receive 55% further upside in this company over the next 12 months, making it one of the best investments to buy on the stock market right now. Dan Ives even says that we believe Palantir has built an AI fortress that is unmatched. He goes on to say, Palantir is poised to be a major player in this AI revolution over the next decade, to where he believes Palantir will capitalize on its data-driven foundation to harness the power of emerging large language models to enhance platform capabilities. So essentially he's saying, with Palantir's overall artificial intelligence and machine learning technology, they are not only at the forefront of this revolution, but literally not many other competitors can even replicate what Palantir can do. And I would argue that none of them can replicate what Palantir does. And if you know me, I've been touting Palantir for over 2 years now, encouraging investors to pick up this company well below $9 per share. However, thanks to the rapid acceleration of artificial intelligence, this only further boosts their overall share price, and thanks to Dan Ives, who again is a very prominent analyst, this shows that Palantir's price target of $25 actually has some really good backing. Now, I do want to make you aware how I still have a hold rating on this company, and I will adjust this depending on their overall earnings results, because I do think the company is trading at a decently high valuation according to their accounting ratios, which I've talked about in previous videos. But I would in no way encourage anyone to sell this company unless you are overexposed, thus taking on a lot of risk in the potential of a stock market downturn, which I also don't really believe is going to happen because the economy is very strong right now. So I would say that Palantir Technologies is really heating up to be a phenomenal company. But remember, Palantir is not the only AI-driven company that that investors should be looking into right now, because I have two other companies on this list that I want to bring to your attention, and I will also add two other honorable mentions as well, which I personally am buying. But first, let me finish talking about Palantir. Many people underestimate the potency of Palantir's overall large language models and their commercial products, which I have been saying for years now will be their dominant revenue segment. I believe that their commercial revenue segment will be larger than their government revenue segment, and that's because Foundry is increasing the number of customers it's attracting, charging these customers $100,000 per month to subscribe to use their Foundry platform, and that helped their total revenue grow by around 18%, up to close to $525 million. So overall, Palantir is a very good company. They have loads of money on their balance sheet and a phenomenal future growth trajectory, considering that the company is already profitable, and I anticipate that this profitability will continue. But there is a catch. Although Palantir stock is up more than 150% this year, their price to sales ratio has been very volatile between 14 and 17, meaning that you are paying a premium if you decide to invest into Palantir Technologies now. However, if you are a long-term holder, and that's the strategy that I advocate for, if you plan to hold this company for the next 5 to 10 years, honestly, you would be fine buying the company right now as is. However, for me, I would rather invest into this company on pullbacks. But now let's dive into some of my other top picks, starting off with Nu Holdings, also known as Nu, ticker symbol NU. Investors in the United States may be overlooking various Brazilian companies such as NuBank or Nu Holdings. And the reason why I think this company is being overlooked is because of their phenomenal growth potential. You should also be aware that Warren Buffett himself, along with Berkshire Hathaway, which is his holding company, have also bought into Nu Holdings. This company is a fintech company very close to SoFi Technologies, which is another honorable mention. After this video, I will be uploading a SoFi Technologies video because, of course, that is also another company that I really like. However, for all of these companies, Nu Holdings, Palantir, and SoFi Technologies, I have below a 5% portfolio allocation because anything above an initial 5% portfolio allocation I deem to be improper risk management. But let's get back to Nu Holdings. This is a financial technology company that has helped out many Brazilians who lack access to bank accounts and credit cards. For instance, NuBank issued their first credit card to nearly 6 million Brazilians over a 1-year period. This caused their overall revenues to surge, to where their customer base climbed to around 79 million, representing a 33% increase year over year, while their revenue grew to $1.6 billion, pertaining to an 85% growth rate in just 1 year. So this company is rapidly expanding. On top of that, they also reported $142 million of net income, up from a previous $45 million loss. Right now, they're trading for a low share price but a high market cap of around $37 billion and a current share price of $7.90. Some investors believe this company is going to fall back down to around $4, while other more prominent investors believe this company could surge up to $11. And although that doesn't seem like a lot of upside potential, I think that Nu Holdings will be reevaluated to where analysts will give this company a higher stock price prediction. However, this company is very fundamentally strong, and I can't wait for the future of this company. Their stock is already up more than 90% this year, with a PS ratio of around 11. And considering its current growth rate, I would say that's pretty good, because normally I look for a PS ratio of around 10, depending on what company that I'm looking at, but for their growth, I would say a PS ratio of 11 is not bad. On top of Nu Holdings, ticker symbol NU, I would also advocate for you to look further into SoFi Technologies, as well as Mercado Libre, ticker name MELI, ticker symbol MELI. And for me, I own all three of those companies, Nu Holdings as well as SoFi Technologies, on top of Mercado Libre. I think all of them have phenomenal growth potential, and there's plenty of market share to go around for all of those companies. But lastly, let's round out the video talking about Zscaler, which is a company I don't get to talk a lot about because it seems that some people are not very interested in it. This is a cybersecurity stock. Essentially, Zscaler continues to benefit from the increasing number of cloud customers who want to move forward to secure their networks. Zscaler is a standout company because they advocate for zero trust security. Essentially, zero trust assumes that any potential network entrant is a threat, and they will have to verify their overall credentials and authenticity to access that network, and this makes them extremely secure. Zscaler had more than 2,400 customers spending $100,000 each or more in their third quarter. That represents a 29% increase in just 1 year. Again, another rapidly growing company. On top of that, their dollar-based net retention rose by 125%. And what this means essentially is that they have long-term customers that are doubling down and buying more of this overall service by spending more money. In regards to the revenue specifically, their revenue grew by around 46% year over year, up to $419 million for the quarter, indicating very strong revenue growth. For the full year of 2023, they're anticipated to bring in $1.6 billion, and that would equate to, again, a 46% annual revenue growth, which is extremely impressive. Ideally, you would want to identify a rapidly growing company with a revenue CAGR, also known as a compounding annual growth rate, over 30%. This company demolishes that by growing by 46%, and although their overall current price may seem high at $157.49, there is plenty of upside left in this overall company with a market cap of only $23 billion. Some analysts believe the company could fall to around $120, while more bullish analysts think the company is worth around $254. For me, I think this company is easily worth $180 and above, so the sky is really the limit for this company, especially in regards to how quickly they are growing and scaling. So far, Zscaler stock has surged by around 40% this year, dominating the returns of the S&P 500, while some investors may want to wait for this company to lower in their overall price to sales ratio because it's around 15, which is rather high. But honestly, if you're buying Palantir Technologies at a PS ratio of around 14 to 17, when their CAGR revenue is less than Zscaler's, then you also should look into Zscaler, which is growing more quickly than Palantir Technologies in terms of revenue. However, overall, I like all of the companies on this list, which I've mentioned. That would include Palantir Technologies, New Holdings, Zscaler, SoFi Technologies, as well as Mercado Libre. I would also encourage you to always make sure to do your own research on these companies before you spend your hard-earned money. But with that being said, I would love to hear your thoughts down below. Don't forget to go and annihilate that like button, subscribe if you are new, and I will see you in the next YT video.